get to the bag, ayy. Got the foot on the gas, pedal to the metal when the lane moving fast, ayy. Let them all cross. If they hate, then let them hate and make a bigger boss, ayy.
This episode is brought to you by SPI Logistics, the premier freight agent logistics firm in North America. For over 40 years, SPI has been diligently building the most successful freight agent network to provide first-class relationships for our shippers, receivers, and carrier partners. We are more than another transportation network. We are a dedicated team of professionals united by one singular purpose, and that is to expedite our agents' success. All of our agents are set up for success on day one, as they are provided with a full suite of support staff that is ready to assist them with everything from after-hours emergencies to financial and administrative needs on a no-fee basis. This way, you can focus on continuing to grow your business. There is no financial risk to start, and you have the ability to earn up to 75% in commissions. If you are looking to take control of your financial future and build your business with the backing of one of the most successful logistics firms in North America, visit www.spi3pl.com to learn more. Do me a favor and let them know that the Freight Coach sent you.
What is up, ladies and gentlemen? We are back. We are live. It is the Freight Coach Podcast, the top podcast in transportation, coming to you guys every single weekday, 8:30 a.m. Pacific, 10:30 Central, to break down some industry headlines. But most importantly, you guys, provide some actual insight into what you can do with all of this information. If this is your first time tuning in, welcome. This is the real side of freight, ladies and gentlemen. And I say that before every single show. And what I mean by that is I only speak with transportation professionals because at the end of the day, I want to talk to the right individuals who have done what you're looking to do or who are currently doing what you're trying to achieve. So you can take that information, apply it, utilize it, and see a meaningful difference in your business and your life. Happy Wednesday, everybody. I got a very special guest for you guys here today. They are, I don't know, one of the, if not the largest data company in the industry. And, it's one of those things where there's a lot of information that's coming at us at any given moment out there. And we're going to break down these last couple of weeks and kind of explain what actually happened, because I have an opinion on what happened. I kind of broke it down a little bit yesterday, but we're going to dive in a little bit deep. And I have my good friend Ken Adamo back on the show with DAT. Ken, thank you so much for taking the time to join me this morning.
Happy New Year, and thanks for having me.
No, Happy New Year as well, man. And it's it's going to be interesting to see if this is going to be the year that I think a lot of people are clamoring for and hoping for and everything else. And there's it's way too early for me to put out an educated opinion outside of my expectations is things are going to look very similar to 2025. And that people kind of need to strap in from that, because in the event that there's any additional volume, I don't know of any shipper that needs any additional providers at this time. You know what I mean? Their entire current network will probably be able to absorb any additional increases.
Yeah. I mean, unless they're adding something specialized or, a lane that they're not familiar with, or changing some requirements, or they have a carrier or a provider that's going out of business, which is more and more common these days. Yeah, I agree with you.
No, it is. It's a wild time, right? It's seemingly every other week I'm seeing some report out there, and I'm not even over exaggerating that by every other week, that there's another company that's been going under, and it seems like it's affecting the legacy carriers that more than anything. And I had on Monday, I had my friend Pam Polyak on the show. She's with Polyak Trucking out of Wisconsin. And, we were breaking down a lot of the regulatory environment that's out there and a lot of the things that they're going through. And she's like, and she brought up a really good point, and I would tend to agree with her. She's like, it's almost harder now to make money as a legitimate carrier because, we have so many hoops that we're jumping through just to prove that we're valid, that it's things cost money. And at what point is it just not worth it anymore?
Yeah, I think that's going to be probably the main story. I think you're going to hear that with brokers too, as we get into the middle of this month when broker financial responsibility takes effect. I think that's going to be a recurring theme for all of 26, if I'm being totally honest.
Mm-hmm. With broker financial responsibility, when does that go live?
January 16th.
Okay.
So that, right, if you're not familiar, I'm sure you've already been prepping your audience on this, right? So mandatory security of a $75,000 bond or trust fund. I think the biggest thing is going to be kind of an automatic revocation of authority if you dip below that 75 grand. And that 75 grand can no longer be secured by essentially like personal assets, like your house or something like that. So it's very much a long tail problem, like small brokerages. But yeah, automatically now, if you fall below the 75 grand, you have 7 days to get back above, or your authority will be suspended.
Yeah. How, like, from your perspective, and again, I mean, I don't even know how to answer that. How is the FMCSA going to accurately track that if we're having as many issues as we are with accurately tracking double identities and stolen identities and everything else?
I mean, the brokerage population is much smaller. I mean, there's 4 million CDL holders. There's several 100,000 carriers. There's 20-some thousand brokers, of which I would guess less than a few thousand are active, like truly active brokers. I think one of the things the FMCSA does really well through their Safer and all their other tools is maintain active insurance certs and whatnot. So I think it'll probably be administered through that same system, if I had to guess. But I mean, like, not great. Like, I don't know. Kind of like, I think a great proxy for a lot of these systems is like the state of our roads and bridges. So it's probably like pretty metaphorical for like how these systems are being. But again, I think it's a headwind that a lot of small brokers probably aren't going to be able to really. And honestly, I think it's good policy. I mean, I think that's one of the main protections for carriers is that broker bond. So,
yeah, it's going to be interesting to see with a lot of this. Like, I'm of the mindset that they should raise the standards, right? Because it's like this is a cash heavy game, and there shouldn't be any way that people can side skirt, like actually doing the job the right way. And having a surety bond and everything else it's a pretty standard thing, right? And especially, like, I would even go as far, Ken, as saying that I would like to see brokers required by law to carry insurance as well, from like a cargo and liability standpoint and everything else, because I feel like that's just gonna step up the game. Because like when it boils down to it, any real active provider out there already carries cargo insurance, because like no real shipper is going to set you up as a broker without it, at least to the best of my knowledge, that they're not going to. And it's just another one of those things that, again, I feel like a raise of the standards is going to benefit the industry as a whole, because again, the people who are doing it the right way, they're already operating that way already. That wouldn't be a new thing, right? Just like the $75,000 bond thing that we're talking about there, Ken. Any legitimate company out there is on top of that already, right? So like, that's not necessarily, I think, a new way of doing anything, but I think it will negatively impact the small startups and the smaller businesses out there in the event that they have any claims against their bond.
Yeah, I think it's a very much bifurcated, like split in two market. I think on the long tail, the small brokerage, this is a big deal. And I think like they largely are more predictably insolvent, if that makes any sense. Like, you can start to see their days to pay creep up. You start to see claims made against by carriers against the broker. It's the big brokers that kind of go insolvent all at once, right? Very rarely do you see like a big broker. There's been a number of examples over the last several years go out where they sort of went down a glide path. They sort of just one day they were in breach of their covenants with their bank, and that was it. So I think that's like a lot of their, I don't want to say like the rhetoric, but that's like a lot of, it's definitely not rhetoric. It's like a lot of like the prudent advice that are being given to carriers out there right now is to like be very mindful of who you're doing business with to make sure that you're going to get paid.
No, I would agree. And I think that, again, like we talk about on the show, it's why it's so, like, not all business is good business. And even on the broker side of things, like, I'm starting to see a lot more of unpaid invoices from shippers as well, starting to creep up, like a lot, in the tune of tens of 20s of thousands of dollars that are out there. And these are seemingly not small companies. So I think like where we're at overall in the economy is like nobody's immune to seeing any issues potentially pop up here over this next year. And I think that, no matter how you want to spin it, we got to call balls and strikes for what it is. And you could sit here and preach from the mountaintop on how great you think things are, but the reality is interest rates are still high. Credit card debt is still, I'm pretty sure, at an all-time high. Gas prices are still elevated. Grocery prices are still elevated. People don't have a lot of discretionary income out there. And if the individual does, the consumer, they're not out there buying a bunch of stuff. And then if there's a manufacturer out there who has a high transportation spend, where are they going to, find their money to keep their payroll going? Again, like, I think a lot of people can overlook how many businesses are like a giant house of cards, and one delay on one side of it could completely derail an entire organization, like you said earlier, seemingly overnight.
Yeah, I mean, it's tough. I think brokers have there's pluses and minuses, right? Brokers have the benefit of not carrying fixed assets, right? What you learn in school is like steel in the ground. They don't have terminals and trucks and rolling stock and all of that. But I think also as we saw in December, maybe it's a good segue, brokers are exposed on both the buy and the sell. I mean, carriers are too, to an extent, right? But it's not like they're going out and rebuying their truck, or they have to renegotiate their truck lease every month, right? They have a shifting cost base, but it's kind of more of a long-term evolution of cost for them. Whereas like a broker lives and dies by the next load they negotiate every single day, by and large.
Yeah, no, I agree. And, this last couple of weeks, I think was, for me, it's anytime I see a bunch of people starting to bang the drum in one direction or another, I always err on the side of caution. And it's almost like, hey guys, let's wait a couple of weeks here, because one day or 1 week of one direction or the other does not define a flag in the ground. It's done. This is where it's going now. Buckle up. Everybody's going to be wealthy again. And, and my honest assessment is wait until the end of January or early February. If things remain elevated at that time, then maybe that we should start approaching it a little bit differently. But I look at it as it was too early to tell. If you go back in earlier years, like when I first started, every single Christmas that I remember, every single holiday season between Thanksgiving and New Year's, always had elevated rates no matter what. Carriers were always asking for more money during that time. I can't go back to my shipper, contrary to what you might see on the internet. I can't go back to my shipper and be like, hey, I need to make more money these next 3 weeks. You need to pay me more money. That's just not the way it works. So and I think these last couple of weeks have kind of proven that, all right, that's a sign of a normalizing of the freight market, because that is very standard from my seat to happen most Christmases, most holidays between Thanksgiving and New Year's.
Yeah, I think what's different is the volumes weren't there as much, which was disappointing, and rates. So it's like a three-legged stool, right? It's like rates, margin, and volume. That's the dance that we all do, right? And generally speaking, a broker can be very successful when two legs of those stool are kind of humming along, right? Mm-hmm. So if you've got like really tight margins, take yourself back to like the summer of 2020. We talked about this a little bit on social media yesterday. Margins were very, very thin, but rates were rocking and volumes were like insane coming out of the lockout. So you were making less on a per load basis, but like the age-old adage that makes everyone cringe of like making it up in volume, you were actually able to do that. It was pretty rare market phenomenon. So what you typically see in peak is higher volumes, higher rates, but you're not making as much per load because the carriers are demanding more money and it's harder to negotiate. I think what we saw in December, which I agree, I put this out yesterday. I'm a certified non-alarmist. I'm not two things. I'm not an ag economist and I'm not an alarmist. And on the alarmist side, like I think it could very well be an anomaly in December. But what we saw was rates certainly went up. No one's going to argue with that. But gross margin per shipment did not, and volumes did not. And I think that's problematic, certainly for brokers.
In what regard is that problematic for brokers, do you feel?
They're doing a lot of work and they're not making a ton of money for the work that they're doing.
Mm-hmm. Mm-hmm.
And if you're already in like a liquidity problem, and again, I think like certain brokers are exposed to different markets. If you're a reefer heavy brokerage, it was probably a nightmare. In December, I think the protect from freeze. The weather that happened was pretty broad. I mean, the Midwest and Great Lakes region, as you know, is a pretty big part of America, and a lot of freight flows through there, or is destined for, or originates from there. So the weather affected things. I do think like there's been some capacity constraints, whether it's related to immigration or enforcement or any of those things. There's also been like the 3-year arc of capacity attrition. And then just, I don't know, Christmas and Thanksgiving and Hanukkah happen the same time every year, pretty much. So, you know what I mean? Like you got seasonality, you got weather, you've got some kind of capacity issues, and all of it made it really hard to cover. Juxtapose that against, I don't want to get too far into the weeds. A lot of brokers shifted to contract in 2025. They gobbled up as much contract as they can. So what happens when your costs remain, your costs are floating heavy and your revenue's fixed. Problematic on the margin side.
Yeah. No, but like I mean, I don't know exactly how long I've been saying how the market shifts. Ken, it's at least over a year that this is what people need to be prepared for, because shippers are not going to want to rebid as fast as everybody would like them to. I'm not saying rebids won't happen at some point in time, but there are a lot of shippers who are going to hold their brokers to the fire as long as they possibly can to keep their rates at that level while carriers are going to increase their prices. That is how a market shift always happens. When a carriers take back control of the market, when it comes into a carrier market, we'll call it, rates start to rise. There is a transitionary period where you better accept that freight. And especially, I think it's more important now, coming off of how easy it's been to cover freight these last 3 to 4 years, Ken. Customers are going to have minimal tolerance for hearing anything other than we'll take care of it, especially if you already quoted that freight out. They're going to be looking for you to come in and do it, because there are providers out there who have very deep pockets who will gladly gobble up right now all of that market share if you start rejecting those tenders. And again, I'm not telling anybody to break even and work for free, but my philosophy is pretty simple. If you're good enough to make $1,000 on a shipment, you better be good enough to lose $1,000 on a shipment, because as somebody who is out there actively prospecting new shippers every single day of the week, they're not taking your calls. They're not even close. So it's like, if you have freight, if you have actual revenue coming through your books, you better protect that at all costs. And if you're going to think that you're going to be able to go in there as a broker and just jack up your prices because of a couple of weeks, there are going to be people who are going to wait on that. They're going to withhold. They're going to gladly have their margins compressed for that time, because again, they're waiting for that volume, kind of like what you were describing back in 2020, Ken. They're waiting to gobble up volume, and then at the right moment, they will go in and the customer's going to trigger a rebid. And then they will have an additional 15, 20 lanes under their belt now, because somebody else tried to pull the trigger too soon to increase their prices because they didn't want to make 5% or 7% on a load when they had no problem making 15% on a load.
Yeah, I mean, I think the you and I were chatting a bit about this before the show started. Like, I think the sense that shippers will always renegotiate at the first sign of a market shift is foolish. If you actually believe that, you're either like sorely mistaken, or it's just satire and you're trying to get like attention. Like, I don't think
shows you don't actually move freight, and you haven't.
Yeah, or you're being satirical, or you're trying to like get a point across, right? I think like I know firsthand instances of large top 10 service providers being blocked. Like, do not let them enter the premises for going back on contract rates year into a 3-year deal. Like, that happens. And I don't think all shippers are that rigid. I think that happens a lot more in the LTL and dedicated and not private, but LTL and dedicated space. Mm-hmm. But certainly if you just signed a deal for $250 a mile in November of 2025, and you go back to your shipper and say, hey, I need $3 because it's hot in December on that contract load, I think they're going to tell you to pound sand, because there's a lot of other providers out there. And, I think that's not how you build long-lasting contractual relationships. And like, let's zoom out a little bit and look at like the overall industry backdrop for most of 2025, and frankly, most of 2024 was winnowing down your provider list to your best providers. Correct. So again, none of us like to think that we have close relationships with bad providers. Yeah. And I'm the same. Like, I like to think when I do channel checks, I'm talking to very high quality providers in the space. And when I talk to them, they're like, yeah, it sucked, but like, we had to do it. Our shippers told us, like, you have to do this. Mm-hmm. Make it happen. Mm-hmm. And they made it happen. And I think like that's why they're on those lists.
Yeah. I have only seen one multi-rebid cycle and on an annual basis in the entirety of my career. And that was 2016 during that polar vortex that it just wreaked havoc for like 4 straight months. And that's when we were paying like 20 grand from Seattle to New York for a reefer in December and stuff like that. Like, it was wild during that time. But, again, if there's been any bids that have taken place here recently within the last 3 months, 4 months, I think that you better lock in if rates continue to increase, if you want to see that volume, because otherwise there will be somebody who will come in, they will bring them in. And guess what? They will get the benefit of the doubt on an increased rate, right? Like say you were the lowest provider that was in there, you went in, you bid cheap or whatever, or you bid at a low margin percentage, you probably won't get the benefit of the doubt to increase your price. But that next provider who's cold calling them at all times, waiting to get in the door, that starts out on a spot market basis, they will have the benefit of the doubt. They will. And then they'll have to, bridge that gap in between that market shift that's out there. I've seen this so many times in my career, Ken. I've seen this so many times that are out there. So many people are quick to try and renegotiate what they bid on. And that's the problem with going in and negotiating against yourself and bidding below what you know you need to make a sustainable margin.
Yeah, I mean, I think it's the age-old analogy of like, you don't have to be faster than the bear, you just have to be faster than the slowest buddy that's out in the woods. Like, I'd say the most common pricing question we get amongst like the meaty middle of brokers. So say like broker size 25 to 250, right? You don't have like an entire pricing floor, of PhDs doing pricing, right? So that type of broker is, how do I price against my stupid competition? How do I price against a broker that's telling a shipper that they're going to hold this rate for a year no matter what happens? Because no one's going to like that, no matter what happens. And that's the part, like, I think like maybe some of this is like rhetorical or satirical around like COVID. Absolutely. If you locked in a rate in February of 2020, you absolutely had every right to go back and talk to the shipper. And I mean, the market just sort of like bent to the will of getting things covered. So what do we tell brokers now? It's like, look, you need to have these, like, it's a much more palatable conversation now to say, hey, here's our best view of what we think is going to happen let's say it's a 12-month deal you're negotiating with a shipper. Yep. Here's our best view of what we think is going to happen over that 12 months. And we're offering our price based on that. And if we're at the bottom of a market cycle, we know that. If rates go up 10 to 15%, we sort of baked that in. That's what we baked into our price. But look, if they go up 35 to 40%, if we see tariffs go reversed and refunds and all of this stuff, we might have to have a conversation. Mm-hmm. And so I think like 6 months in, if all that happens and you have that conversation, if it's the same people you're talking with, they're going to remember that you were honest from the start. If you go in and you're like, hey, no matter what happens, this is our rate. We guarantee our rates no matter what for 12 months. And then 6 months from now, you're like, hey, rates are up 30%. This is the new price, take it or leave it. You can imagine two diverging outcomes of those different conversations.
Yeah, I think that there's a lot of individuals who have that knee-jerk reaction because if you've never been in this environment before, Ken, where, capacity might be tightening up, rates might be increasing, you've never really like operated on your own, it's a pretty sketchy time for you. It really is, because
it's the hardest time to price freight.
Oh, it's the worst time to price freight. To be honest with you, it really is. But like, you have to, if you want to play ball, man, like you have to go in there, and there is going to come a point in time where you are going to lose money on freight. You're going to break even on freight. You're going to make a little bit of money on your freight. And you're going to have to wear it during that time. I'm not saying that customers won't ever initiate a rebid. If they have 10 providers and all 10 of them are coming to them and saying like, hey, the market flipped, it flipped bad, we need to talk about this, then they will do that. But you can't have 30 days of it and then go in and think that customers are just going to be like, oh, you lost money in December. All right, let's renegotiate in January. Let's get you more money, when it's historically the softest freight market of all time from January through mid-February, essentially up to produce season. I would say January and February is the softest freight market of the year, post-holiday, produce season kicking out of Florida.
Yeah, I agree with all of that. And I think it's also an interesting time because I would honestly say prior to like the ELD, Trump tax cut one, tropical weather, the 17-18 boom, I would have said like it's pretty predictable what you're going to see and what you're going to get. Like once it starts to turn, that is like the genesis and the prominence of the coyote curve, right? Where you could pretty predictably run your business based on this, like, yeah, the amplitude of the cycle was increasing. The frequency may have been shortening a bit, but like it was this up and down and up and down. And then I think we saw a shock, which was, holy cow, tax cuts, tropical weather, ELDs. You had like a capacity and a demand shock. And then a bunch of industrial, the corporate tax cuts on top, right? A bunch of industrial boom. And then you had COVID, which was even crazier than that. So I think like sitting on the precipice of like, we have no idea what the cycle is going to look like. We have no idea when it's going to start. We have no idea how long it's going to last. We don't know what the shape is going to be. There's a lot of unknowns. And I think, unknowns are good in freight. I just don't think they're great for pricing people sometimes.
Yeah. I think that, and again, I understand the mentality because it's like, dude, it's been bad for a lot of people for a very long time. Carriers, brokers alike, whether it's with your existing customers, new opportunities, trying to grow your business. It's been challenging, but like I'm an optimistic realist at the end of the day, Ken, and I call balls and strikes as I see them. I mean, I always like to caveat everything by saying like, guess what? I could be wrong, but I just don't see anything dragging on at that level when we already came back post-holiday and tender rejections already dropped. Like that's a very clear indicator that things are probably going to equal out and the market is going to continue to perform the way that it was pre-holiday. I don't even want to call it a boom, but pre-holiday freight, we'll call it. I think it's going to even back out. And again, like my brokerage doesn't benefit from this, right? Like my brokerage would very much benefit from a tight capacity market where customers need to look outside of their current providers to start handling some of their freight. So I hate even saying this, but I just like, that's just the sentiment that's out there. And then again, because if we look at the overall freight volumes, that's a another large data set that I pay attention to, because if there's not an increase in volume or if there's not a meaningful increase in freight volume, I don't know one shipper that's out there who's already set up vetted current providers cannot take on additional volume. They all can. You ask any broker, any carrier out there, can you take on more freight? Every single one of them is going to say yes.
Yeah, I'm maybe a little more optimistic. I think we'll probably settle. I think like this whole notion, and again, I know a lot of the people on the Twitter sphere. I know that they know that we're not going to hang out at December 24th rates for all of Q1. I mean, so yeah. I agree. I do think we'll probably settle a little bit higher. There's like this blood in the water, man. I think there's a lot of like pricing strategy out there. If I ever hit the lottery, I'd love to like sit down and write a book on like freightisms would be one of my favorites. So I'd have to sit down and write a book on that. And then like, I think like the pricing strategies and pricing dynamics in freight are fascinating. And I think like one of them is like, there's like a blood in the water kind of like, once I think carriers got a taste and it kind of works its way up from the carrier to the broker to the shipper, right? I think last year, maybe it was a little easier to get some contracted rate increases. Again, low single digits because the shippers had heard so much that the market was going to flip and then it never did.
Yep.
And, we talk to a lot of shippers. I'm over the shipper segment now. I'm talking to many, many shippers a week. And they're like 3 to 5% is probably what they're looking at for the first half of the year. So bids that are coming in, kind of the effective spot, maybe 3 to 5% in that first half of the year, which I think would be great. I mean, I don't think anyone would turn down 3 to 5% tailwind in any way, shape, or form. And again, it's the worst quarter of the year. Q1 is the worst quarter of the year for freight. So if you could stack 3 to 5%, contract bump in the first quarter, and then your spot volume for produce starts to really maybe come in at 8 to 10%, and you've survived this. The key is like, if you survive this long, it's kind of flushed out a lot of like the very poorly constructed businesses, both brokers and carriers. So yeah. I don't know. I think I'm a little more optimistic. I do think the administration does seem hell-bent on doing something about the immigrant. Like I think a lot of it is just a redistribution of enforcement focus. I don't actually agree with folks who think that we're going to see increased enforcement through OB3 or anything like that. But I do think like that'll put a dent. I do subscribe to the idea that we'll probably see less capacity come back from break, and so, I don't know. We're already at a low capacity environment. I think it could be a little bit more optimistic. And again, this is like the biggest misconception, Chris, and I think you said it like really well. Everyone thinks DAT does better when rates are low. We object. Like, I will show you a correlation of my household income versus spot rates. And I promise you, we all do better when rates are high. Honestly, like to an extent that you can even say that about shippers, right? Yeah. Like they might not want to admit it, but like at the end of the day, having a super healthy carrier and broker population that are making substantive rates and their operations are working well, benefits everybody. So
Yeah.
I want rates to go up more than just about anyone else.
Yeah, I do too, man. Like a lot. I would love that because, when you're self-employed and your entire income and household income is based solely on how well your business is performing, I would love for all of this stuff to happen. And, from my seat, I hope it does, man. I hope rates go up to $4 a mile, right? Like I hope people are just making money, because if everybody's making money, everybody's generally in a better mood. Like I've never met that many pissed off people who are like making a livable income. Kind of solved a lot of issues for some people.
I'll tell you this, like, it's like the ultimate defense to this, like DAT or a truck stop or sonar. They control rates. Let me tell you something. If I could control rates, I'd be like the snow machine making those things $4 or $5 a mile all day, every day. There'd be 300,000 carriers signed up for DAT, and I would pull out my lawn and pave it with $100 bills. That. It doesn't work that way, right? Like we're coming off the greatest boom we've ever seen since World War II for freight. And we're coming off probably the worst freight depression or whatever you want to call it since, I don't know, the mid 90s or the late 80s. Like honestly, I think you'd have to go back that far to find a time period that was as bad and prolonged as what we saw. So we're coming off 2 black swan cycles. I think everyone's anxious. Like, would you not be happy with like an 8? Let's just say if you could shake your snow globe, right? Your 8 ball, and you got 7 to 8% contract rate increases in 26, and by the end of the year, spot rates were running plus 10%. Would you not be thrilled?
I would be ecstatic. Because I'm just looking to help as many customers as I possibly can with our transportation services. I just want to get in front of the right customers that are out there. And, I just like, for me, I'm not, yes, I'm a capitalist, Ken, when it boils down to it, but like, I truly believe in ethical capitalism. I want everybody to make money. I don't want it to be where like, I'm the only one making money or one party is only making money. I like to see a healthy economy as a whole. I like to see a healthy country as a whole. And, when we're all prospering, man, things look a lot better for us, and any meaningful improvement, I want that, right? Like I want that for the industry. I want that for all the providers that are touching this industry, because we are literally that backbone of this country. And if we're making money and we're healthy and our roads are safer, we all benefit from that.
Let me give you a rebranding effort live on air. Don't call it ethical capitalism, call it sustainable capitalism, because that's truly what it is, right? Like, I don't think anyone wants a trucker to go out there and have to make choices about, like, I think we all would agree, like feeding your family. First, we all want them to be able to earn a living wage. Furthermore, I want them to be able to maintain their truck and have the necessary insurance and pay themselves and maybe take a couple of weeks off here and there, because that's healthy. Like, yeah. So I think when you look at like a sustainably capitalistic approach to this, you need to raise. It's a different show. Maybe we can talk about this when the weather thaws out a little bit. For me, anyway, I know you're in the sunny Southwest. Like, raising barriers to entry will do a lot of the things that we've been talking about. And I think it's something that should be explored in addition to the other actions that are being taken, because I think then we can start to see sustainable floors in place where we don't get into this mess again.
No, I get it, man. I agree. We'll have to have you back on when it's sunny and 75 up there in Columbus, Ohio for you, man. But how does anybody reach out to you guys to find out more about what you got going on at DAT?
I'm on Twitter at the Freight Nerd, or X at the Freight Nerd. I'm on LinkedIn just under my name. You can reach out to DAT. We're all over. I think we'll be at Manifest as the next big conference coming up. We got quite the contingent going there. But yeah, I'm around. I'm excited to start the new year. It's probably as jacked as I've been to start a new year in quite a while. I think I'm ready to get the funk off and get rolling.
Same here, man. I'm ready to rock. I'm ready to get that out there. But Ken, thank you so much for joining me. That is going to be it for today, ladies and gentlemen. As always, if you got value in what you heard and you're not subscribed, subscribe to the show, you guys. And if you're feeling ambitious, rank it on iTunes and Spotify, because if you see value, your network's going to see it as well. I appreciate you guys. I love you guys. And we'll be talking to you soon.
Came back with a bang, window down, yelling out money, anything. Hey, ooh, got the foot on the gas, pedal to the metal when I'm getting to the back.